Hello, everyone. Guys, can you hear me? No, thank God I did that. I noticed most of you have been having a similar difficulty recently, which is in understanding your trading plan. Some of you have found um, a lot of troubles. I've had a lot of troubles understanding what you to be looking for on the charts and what you're to be doing while trading. Some of you have gotten the strategy confused with your trading plan so badly that you don't even know how to identify your risk management from a trading plan and understanding your method of trading at the same time. Because your method, your technical method is just an addition to how you do your stuff, right? It's just an addition to what you do. So if you don't have a trading plan or you don't know how to do a trading plan and you are relying on your technical experts to give you um that accuracy or that win in forex, that's a lie. While you'll be having a perfect chart, but making money will be very difficult for you. So, is this a particular field we should throw lights on, or do you guys prefer we going over the technical analysis? Anyone can answer. Anyone at all?
I am okay with money management, if you hear me.
Yeah, I can hear you good. But you said you're okay with the topic, right? You went to just going about that. Hello, am I audible?
Very badly.
Is it clear now?
Yes, it is.
Yeah, so I was asking about that and nobody said anything. So I didn't know if it was bad or clean, but it's okay now, right? Oh, hold on, let me check something. 1 minute. All right, so how about now? Is it audible?
It's clear for me, yes.
Anyone else? Can anyone else confirm if it's audible enough?
Loud and clear. I can hear you.
All right, so
Loud and clear.
you guys heard what I was talking about with the topics, right?
I joined late, so I didn't get all what you said.
So I was saying, most of you who have been coming to me recently have been finding difficulties understanding your trading plan and understanding what to look for. Now, some of you are actually confusing trading plan with your risk management plan, and also not understanding that your method only plays a particular role in your plan. When I mean method, I mean your technical methods, right? Which is the SMC. I don't know if any of you use any other methods. I don't know, but what I taught you guys was SMC, and some of you might be having a clean chart, but finding it difficult to make money because of not having that understanding of an entry. But I can tell you 100%, the entry is not the problem here. Is you not knowing when to enter or when to look for an entry, right? So I wanted to throw more light on this, but I don't know if you guys want us to go over the average um, technical training which we do every weekend. That's fine. We can go over that and look at the charts right now, or we could do this instead. So which are you guys game for?
To do this.
The first one.
Yeah.
All right. So me too. I'd rather pick that. So has anybody been having those issues recently? Anyone at all?
Yes.
Would you like to discuss with us some of these issues? Would you like to discuss with us as well? Share your experience with us. And if you have dealt with this particular issue, would you want to throw a little insight on how you got to bed over yours? Or would you want to just hear my opinion over the whole thing? Anyone at all?
You mean how we find our entry, right?
No, not entry itself. Okay, now listen. We know making analysis, making all this on the charts is just like 30% of the work, right? You have to know, let me look for a more clean and way charts to use. Let me use USD. So we have this. Let's say we were looking for an entry. Let me look for somewhere clean. These days, the market has been very manipulative and it's not been easy to trade, especially currency pairs. So let's just look for one of those clean entries and use them for examples. All right, so we have this guy. We have this. Where is break of structure? Hold on 1 minute. We had this internal range high, and then we had this IPA candle, or you could say OB, or you could say the wick, POI within the wick, whichever way you want to call it. But that was our POI. All right, so let's say this was our POI, and we're looking for an entry from here. Okay, so now this is the setup. This is the setup, right? This was the mitigation. Some people, like going down to the lower time frame, let's say the 5 minute time frame. A lot of people would have had this, clean chart, but making money off this chart is a whole different thing. You know that, right? You can have a clean chart like this. You can have an analysis play out like this. But when it comes to making money from Forex, when it comes to making money from this, which boils down to your MT4, a lot of people tends to make a lot of mistakes. You know that, right? Let me give you an example. Stuff like this. You see someone picking this as a POI. Well, let me, my mouse is rotating. I don't know what's happening. So we had this as a POI. You will see some people, you'll find some people doing this. Break of structure. Order block. Mitigation. Inducement. Now, do people do this or not? And then what happened? We see Wise comes back up, give them a reaction, but instead stops them out. And then still goes in their direction. So does anyone have any experience like this?
I think I had similar setup, but my PI, I was looking at the upper side. Then I was standing, the upper side was Asian range high. So I waited and I didn't go in.
All right, that's true. That's a confluence you can use. But a lot of people find it very difficult. All right, so this is our focus for today. How do we avoid this? How do we spot this and know the trap? Now, these are some key points you can use when you're looking for an entry or when price has mitigated your POI and has given you a reaction. Number one, you can jot this down if you want. Number one, do not pay attention to just POIs after a change of character. Pay attention to the strong highs and the weak lows. Where is the strong high in this scenario? This this is not a strong high. This is not a strong high. This is not a strong high. This is in fact the strong high that caused the manipulation. All right. So pay attention to the strong high for your SL, and then pay attention to the weak low as your first target. Okay, as you can see from here, sorry. As you can see from here, once price cleared out that low, what do we see? The pullback. You can see that, right? You see, we had a pullback from here. So if this was our target, and then we had this, something like this. This should have been our first target, and this should have been our pullback. So from the pullback, we would have gotten a counter trade from here. To clear out what? Internal range highs. This guy. You guys know why I picked this as a POY, right? Why I picked this is because it's the closest POY to the inducement. This external low is the inducement. We're expecting a pullback once price clears that external low. Now, what do we also have here? We have this guy. Yes, sir. We see price clearing at this external low, and we also see liquidity over here. Now, I know this was not what we're supposed to do, but pay attention. From here, you will understand what I'm doing. This was our closest POY, right? This is the closest POY reacting from a strong high as well. As you can see, price came back down, went up, came back, broke structure again, and went back up. So this is a strong high, you know, within the internal range. So if this is broken, we pay attention to the extreme. And if you use the premium and discount tool, you would also find out that that should be resting within the 50% POY of premium. So that would have been our POY number one. So we got a reaction. And if this was kind of like an edge trade, would have had something like this. While at the same time, a lot of people can mark this out on their trading view and still not be able to trade it, which brings us back to today's topic. Now, have you been finding it difficult to trade your setups? That's my question now. Has anybody been finding it difficult to trade their setups? You can identify stuff like this, but you can't actually take trades. When you do take trades, it's not like you do them wrongly, but you end up getting stopped out by maybe a break even, or let's say closing early or stuff like that. Does anyone have any difficulty like that? That's my question.
My problem was closing early.
Okay.
Yeah, but I think that, yeah, hopefully I've been going through the video again and I'm making progress, especially this week. Yeah.
All right. So anyone else? Anyone else have been having problems trading their setups?
Yeah, I'm in the same boat.
Yeah, I'm not profitable, so yes.
So you all have been having issues and no one is picking up. Everyone is just quiet.
Well, I said that we're having whilst I'm having the same issue.
Yeah, I heard you, Solomon. You were an exception. All right. So how do we deal about this? Now, this is what I do. First of all, once there's a break of structure, let's say like a change of character from here, coming from a POY. Okay, sometimes we might not have structure forming this. All right, this is structure giving us a clean price action in the lower time frame. But when we go to the higher time frame, which is the 30 minutes or the 1 hour, for intraday, when I say higher time frame, I mean for intraday, all right? What we see is price doing this. And then we see ourselves trading stuff like this. This is how I trade intraday. When I want to swing, I aim for this guy. probably from here to here, which was kind of like what I did on my AUD card. It was kind of like an intraday setup, but at the same time, I still took a swing entry from there. Right? It's very easy. The thing is this: when you find it difficult to trade your setup, is because you're having these problems when it comes to understanding your trading plan. Now, a lot of you might have dropped out this in the past, but many of you might no longer be following those stocks because maybe you feel like you're good enough to understand trading plan now that you don't manually need those notes around you anymore, which is a big lie and could cause you a lot of issues in trading. Some of you might have thought of technical methods being everything and just going with the flow. You don't check your fundamentals anymore. You don't follow your trading plans anymore. You don't look at kill zones anymore. You just look for a POI and then you wait for a reaction and then you stake your money on that. If you're doing that, you better stop that. I'm not going to call anybody. I'm not going to ask you guys, but deep down, you know what I'm talking about. If you are doing this, you have to stop that because you're not losing money because of your methods. You're losing money because of your psychology. You're being messed up right now. All right, so if you know you're doing that, you have to stop that. You have to go to the original ways. One thing with trading is this. It's very addictive to do the wrong thing. All right. But when you keep doing the right thing, there's no way you're going to win. It's like playing basketball. It's all about fundamentals. Right. Once you keep to the rules, you keep to the fundamentals, you keep to the basic knowledge, which is finding your setup, waiting for a reaction, and making sure before you place that trade on a MT4, you have the proper checks of your trading plan. If that is confirmed, there's no way you're going to miss. It's just like playing basketball. You have the fundamentals, you do everything right. There's no way you're going to miss. All right, there's no way you're going to miss. If either you're being a short person or a tall person, same way. It doesn't matter if you're having a big account or a small account, or you're trading crypto, or you're trading forex. All right, so but if you keep doing the wrong thing and thinking it's because it's easy, means it's going to make you money. That's a very big lie. You're being very, very unprofessional. Right? Sometimes I find setups where I do wait. If I don't get my proper confirmations, I don't trade them. Let's say, for example, having a setup being mitigated by Asian section. You see your setup is being mitigated by Asian section, and you only trade London and New York. But because of your greed or your control level is very low. Sorry about that. You intend to just do what you want and just try to place the trade to make that quick cash. But what you end up doing is losing your money and then coming back to think the technical method is what's causing these issues. But no, it's because you're not keeping to your rules anymore. Milan, welcome, bro. So mainly it's because you're not keeping to your rules. All right. So even if you have something like this, even if you have let's say a POY, yeah, let's say something like this. And you get a reaction this quick. I've already told you guys. I've already told you guys how to handle stuff like this. Can anyone remember that? Anyone remember when I said that? How do you play safe with a quick reaction? It's always okay to miss. If you miss a POI, being mitigated is fine. You can always get it back. Always. Like I mean, literally always. If you miss a POI, you get a quick reaction. Don't worry about that. A new one is gonna come. But at the same time, we do have a method of dealing with stuff like this, so we don't miss out on that. Can anyone remember that? Well, I did mention if the POI is not as big, if the POI is not too big and is what your risk, then you can go for it. But if it's too big and you're scared of that, you can cut your lot size, cut in on your plan, adjust your money, play safe. If you want to trade the reaction, if you want to trade the aggressive, then play within your risk level. Do not over risk. Do not risk what you will trade on a confirmation trade on an aggressive entry. That's very bad. If I was to trade this right now, sometimes you guys might see me taking aggressive and you're like, why am I taking aggressive when I say aggressive is bad? That's because of one thing, bro. I'm keeping into my risk management plan. How many pips is this? This is like 4 pips. This is 4.5 pips. Why won't I go aggressive on this? What confirmation are you waiting on? This 4. It's literally just 4 pips. Right? If you're using risk management, no matter the reaction you get from this, even if you lose this, you're not going to lose any money. You're just going to lose even if you use let's say 0.1 lot size, that's using $4. But how much would you gain? 25. You see the difference in this? So if you're going to be doing aggressive entries, even if it's on the higher time frame, cut your lot size. If normally you will be using 0.1 lot size on 10 pips, then why not make it lower? You know, maybe using 0.1 or 0.2. Sorry, if you're using you can use 0.01 or 0.05, you know, on an aggressive entry from a high time frame with over 50 pips, with over 100 pips lot size. It all depends on you. All right, it all depends on you. If your lot size is just within your capital rate, within a loss which you can handle, then you can take aggressive. There's nothing wrong in taking aggressive on that. That's what I'm trying to say. But if you know your lot size is within a range that you can only handle 10 to 15 pips, then I believe it's best for you to wait for reactions from your POYs on the higher time frame and get an entry on the lower time frame within 5 to 10 pips. Okay, but if you know your equities is strong enough to hold aggressive entry on the higher time frame, then go for it. If your psychology is strong enough, go for it. Okay. Just one question. What would be the best approach or plan for APC to POIs? All right, good question. So let's say we had 2 POIs. Like I told you guys, within a range, we always have 2 POIs. All right, let's say we were bearish. This is a bearish structure now, right? Remember, what you're doing is you're looking for an entry within premium level. Now, if you're not good with spotting the POIs directly with your eyes, you can use a Fibonacci. All right, so you see the red line is like the 50% equilibrium level, right? And these above lines are significant level you can see a reaction from. This is the retail level. I call that the retail level because the reaction doesn't seem to last for long. All right. So this level, what does it do? Mainly price could react from this after clearing the equilibrium level, returning back down to this point, then heading back up to mitigate any of these 3 levels. All right. So we're only having a POY either within the zone or within the zone. So if we do have 2 POYs like this, if it's coming from this one, what do? We wait for a reaction. Or I go to the lower time frame, go to the 1 minute time frame, and do what I did on that price action, which I showed you guys earlier within the Zoom section. Right? But if you don't have something like this, and let's say, let's go to the live chart. This is just a diagram, all right? So this is a diagram of how to know where to expect the POY to be in. Right? So this can help you understand where to expect the POYs and where to know when a trap is being set. Let's say you had another block at this point, you know it's a trap. Now you look for something within the 61% Fibonacci level to get an entry. If you see another block within this level, you know it's likely to hold if there's a reaction already from this, which is going to be used as an inducement. Okay, is that being understood, guys?
Yeah.
All right.
Yes, yeah.
Yeah.
All right, so let me take this out. All right, let's say here's an example. All right, so we had this POI, this other block right here. And we also had this one. This is kind of like your question, right? Milan, this is similar to what you asked, right? Yeah. All right. So now we had a break of structure, which gives us that clean confirmation. We also did have a break of structure previously. All right, so what do we want to see next? We want to see a pullback into our POY. Now, at the same time, we see this pullback, which give us an inducement. So in this inducement got cleared out, but price never mitigated our POY, which created more price action, bullish price action. If this is an inducement that gets cleared out and price hasn't mitigated our POI, what do? We swap, we flip the price action. All right, go to the bullish side and you would see an entry to clear out that high if it's really an inducement. As you can see, cleared liquidity from here, mitigated this guy. So what I mean, if it's clearing out liquidity, it's going to be mitigating something. If it's mitigating something, it's going to be clearing out liquidity. That's how it works. So if you see liquidity being cleared out like this, go to the opposite side of the price action, and then you will see an entry because this is a stop point, not a break of structure, just a stop point. Right, so price cleared out liquidity from this point, and then it's going to be clearing out liquidity from the other side, mitigating the POY. Okay, so this becomes an inducement as well, because it's now an external range high and also a weak high to the internal structure, which is this guy. So now it's down this high against this low, which this is going to be a strong low because we can see it clearing out liquidity, mitigating something, and this failing to clearing out the high, the low that created it, which is this one. All right, so this caused a break of structure, mitigating our POI. Now, with mitigating this POI, we had this one as well waiting. We use a Fibonacci level. We see both of them are resting at premium level. All right, so as you can see, 61 to 71 Fibonacci level was where price mitigated, which was where we can see our POI. You see how the institutional level, which is the green level, outlines with the other block, while the others outline with the second one. So you see the Fibonacci also helps you to identify your POI if you're having difficulties identifying the POIs. Okay, so within this, price mitigated our zone, and if we go lower to a lower time frame, we'll definitely see something clean. Which is this? So about that, I'm very, very sleepy. It's 10:30 over here. So we had this POI, price is mitigating this, and we can see the reaction from this point. Although we had two POIs already waiting, but at the same time, you see this guy was mitigating this. All right, so this is not an obvious POI, which is open because we can see this has already mitigated. But let me look for one which doesn't have that mitigation, which is still very open. But I can tell you that if you find something like that, where price has a POI above yours, all you have to do is wait for a reaction. I can tell you if we could go lower, which is like the second time frame, if this let's say if this was the 1 hour time frame, you would have definitely seen an entry from this point. Right? This would have been an entry because one, we had this kind of rejection from once price mitigated this order block, which is also a significant Fibonacci level as well. So that reaction alone on the lower time frame, which is let's say the second time frame, depending on what time frame this is, gives you that confirmation you need on with its own internal structure from this point. Okay, and at the same time, even if we had missed on this entry, it's all about waiting for reactions. That's all I can say. It's all about waiting for reactions because no matter the POI you have, no matter how far it looks like price has gone, you're going to see that reaction. If you pay close attention to it, filter out the noise, you're going to see that reaction you're looking for, and you would get done an entry. And that's just the truth. It's all about patience, all right? Because this was the break of structure from here, and then this was the pullback. So it's all about patience and waiting for price to react from the POI, so you could know which and which is giving a reaction. As you can see, price stopped on this because this was supposed to be mitigated, but price never went there. What happened? During the news period, price stopped on all of this which is now internal range liquidity. That is after price has, broken structure on the downside. You see that? Broke this swing low from here, and then the pullback came in. Well, pullback came into the full price action. It was supposed to be this would have been a POI. But instead we had a stop point, which is inevitable. We can't control that. So this was what happened. This was the price action within it. A lot of people were stacking orders within this price action. So they just stopped on everyone and went in that same direction. Well, so Milan is all about waiting for reaction. All about waiting for reaction. Wait for price to react from your POI before you get on an entry. No matter what, always wait for a reaction. Okay? All right, bro. So that is that. Now concerning the trading plan. Now a lot of you already know what a trading plan is. If you don't, there's a video for a trading plan. So I'm not going to break down a trading plan, but what I'm going to do is break down how to use a trading plan on technical analysis. Now, my trading plan is this. I don't trade outside kill zones or close to kill zones. If I must trade, it must be around the kill zone. That's the trading plan. Why am I doing that? Because I want to go in and out as fast as possible. That's based on what you want. Let's say you're a swing trader right now. What you want to do is go in and out, and then at the same time be in the trade so long that you don't have to get in on an entry every single day. That's what makes you a swing trader. Now, if you are a swing trader, you are expected to get that entry from the higher time frame. All right. Now I use sections because I'm scalping. If you're swing trading, you can decide not to use sections because price could mitigate your POI at any time. Okay. So let's say for example on the forward time frame, you can't use waiting for price to react on New York section on the forward time frame because each candle doesn't really work with the time frame, stuff like that. I don't know if you get my point. When it comes to swing trading, for scalping, you can easily wait for price to see where price is reacting on that particular section to get in on the trend before the section ends. That's intraday trading, that's scalping. But when you're swing trading, you can't it doesn't work that way, right? Because section doesn't really work with this. A price could mitigating this at any time. So how do you get this entry? That's a trading plan on scalping. You can't use that method on swing trading, right? Because of the difference you have in sections. Okay, so what you do is you look for a trading plan that fits into your swing trading that could help you out. Now, when it comes to swing trading, this is what I do. I make sure I do not have multiple setups at the same time. Why is that? Swing trading needs patience and time, needs you to observe it that more. When I'm scalping, I don't need to be on the chart for too long. All I have to do is just identify the POI, identify the kill zone, then wait for the mitigation and ride, to the external high of that particular time frame, and I'm out. But if it's swing trading, I have to make sure I get a reaction from the higher time frame before moving on to the lower time frame to, look for a perfect entry, not to get stopped out on break even as price goes back up. So you see, these are some criteria that doesn't necessarily need the technical expertise, your technical expertise. This has nothing to do with order blocks. This has nothing to do with imbalance and stuff like that. So if you do know how to identify the imbalance and the order blocks and stuff like that, but you do not know how to have a trading plan or what to do, you're planning to be a swing trader, but you're studying sections. How is that supposed to help you? All right, so you have to know what's for entries, what's for swing trading, and what's for scalping. Okay. Now, number two about this, which is also causing a lot of troubles in making profit from your setups, is over trading. Most of you spend too much time in trading that you forget that you're not a machine, right? And you're battling a machine, and at the same time, this machine still rests during the weekend. So which means you as a human, you don't even have to trade every single weekday. All right, you just have to have a particular weekday you can trade, and that's all. Hold on, let me check up on the fan. I don't know why it's making this weird noise today. All right, I'm back. Sorry about that. So overtrading is a very big factor, which has already so we have already discussed what a kill zone is. All I know is ICT concepts. It is opening section, right? And the best I don't know. This definition, should I say it's correct? Or should I say it's wrong? Okay, you know what? Today's topic was mainly understanding most of the problems that could cause overtrading or cause you losing trades while making a good setup. I've told you guys, number one is what was number one? I don't know. Someone who is jotting down could list what I mentioned on the group, and we'll clap for you because that's something really brave to do. With the first one was, I think I can't really remember, but I think I'll write that down and also send to you guys in the group because we have less than 1 minute now, and I'll write that down. I'll write that down and send to the group. But about kill zone is a topic we're going to discuss on its own. So let's say next week, on next week's section, we'll be having kill zones. Okay, just kill zones, and we'll discuss about that. But on this section, I'm releasing a YouTube video in like 2 hours from now, which tells you about the 5 things you should know about smart money before trading them. So that could also help you with the over trading, and also help you understanding your setups more, and also help you with understanding the difference between swing